Hello traders, good morning, good afternoon, good evening, bonjour, bonsoir mes amis, guten Morgen, guten Tag, guten Abend. For those of you who are new to us, we are the TST WSYS 008 traders. For all trade, we use the 5% money management rules and apply stop loss in all trades. This video is for educational purposes only. It's neither a solicitation or an offer to buy or sell any financial instrument. It is primarily for the TSTW traders. Today is the 18th of November 2013 and the time in London is 2:53 a.m. in the morning. All right. In New York is 21:53 p.m. on Sunday because of the time difference between London and New York. You can see that New York is Sunday, in London is Monday. Okay, all right. The title of this video is Tips and Tricks of how to count Elliott waves. Tips and tricks of how to count waves. All right, let's get started. I'm going to go very quickly and explain to traders what we are doing here, because if you go to www.youtube.com/24 Elliott waves, you will see videos where I was analyzing the dollar-yen currency pair counting wave, okay, and using the wave theory to forecast, okay, the next price move. All right, what I'm doing here, the first steps, the tips that you need to understand when you're going to count wave, you need to do it like a chart, okay? You just say that the price goes up from here to here, and then goes down to here, and then went up like this, and then went down, and then went up, okay? That's the first step, okay? If you're going to teach somebody how to count wave, or you want to teach your child how to count wave, that's how you do it, okay? That's very, very simple. And also it's also very powerful. Now you see I'm on the weekly chart. All I did now, I say to myself, the price went up to this level and then went down and then went up and then went down and then went up and then went down. Now it's again going up to this point. I've drawn these lines, okay, as you can see here on the weekly chart. Let's zoom into it a little bit so you can see clearly on your chart, okay? This is what the price has done, all right? So this is just the first tips. You want to count waves, you just draw it like this, the price move, don't lie to yourself, just do it like this, and then that's it, okay? All right? The next thing I need to say to traders, the next tips are to count wave correctly. You must understand the Elliott wave patterns, all right? There are 13 specific Elliott wave patterns, all right? So you must learn, that's the theory. Go on the internet, go on YouTube, all right, go to www.24elliottwave.com, learn the Elliott wave patterns, all right. In this video, I will be talking about the zigzag pattern. It's a specific Elliott wave pattern, all right, all right. If you don't know what is the zigzag pattern, you need to go to, okay, our YouTube channel, 24 Elliott waves, all right. So that's it. I've done the first step. That's the first tip. I draw my line. All right. What I've said to traders before, because beginning of this year, 2013, I was busy analyzing the dollar-yen, all right, forex, all right. And I was telling traders that a lot of traders before, beginning of the year, I get into trouble with other traders because some, okay, experienced traders count the wave wrongly. And I was telling everybody that, okay, they were completely wrong, all right? And we are still, okay, in this discussion. Most of the traders thought that this was the first wave, where from here to here, they thought that was the first wave, and they say that this is the second wave, and this is the third wave, and blah, blah, blah. So I say to them, no. This is not the first wave. This one here is not the first wave. Why? Following the guidelines, the first wave must break a resistance level. So go to our YouTube channel and you will see a lot of video when I was talking about this subject, okay, of wave count, okay, how to count Elliott wave, all right, trade Elliott wave like God, okay. Check those video and you will see me talking about exactly what I'm talking to you here. This is not the first wave because it did not break any resistance level. Look, the resistance here is the first Elliott wave. They say that this is the first Elliott wave. What kind of first Elliott wave is this one? All right. I have also posted a video on YouTube which we call wave count by comparison. Again, in that video, I've demonstrated to traders that this was not the first Elliott wave, okay, and this was not the second Elliott wave. All right, my wave count, okay, there is always disagreement between, okay, Elliott wave practitioners. So do not think that, I'm having a go at my colleague. All right, it's just there is some disagreement. That's all. Okay, it happens. It happens. All right, it's normal. So this is my wave count, the first wave from here to here, which I show traders who are following us know that this is the first Elliott wave. That's my wave count. All right, and I was telling them so far we are still in the second Elliott wave. Okay, for this currency pair. We are waiting for the second Elliott wave to be completed, and then we will be ready to catch the third Elliott wave. All right. We also know that in December, talking about the debt ceiling for the United States, there are more discussions that will take place which can affect this currency pair. Another thing that we need to know also that very soon Mr. Bernanke will step down, and Yellen, the new Fed, the future Fed, she will take over soon, and she will be the new chairman for the Federal Reserve. All right. So all this taking place can affect the dynamics of the technical analysis. My approach is very simple. I'm not the purest technical trader, though the Elliott wave theory is the purest technical analysis. But my approach is that I prefer to acknowledge the economy news, the fundamental, together with the technical analysis. This is my trading style. You will notice that some of the Elliott wave practitioners will say to you that they don't pay attention to the economy news. This is their trading style. My trading style, or my recommendation to traders, is always to combine the technical and the fundamental. After the wave count, check Google for nows, check Yahoo for nows. That's the right way forward. Why? Because we are not alone in the market. There are market participants that are using the fundamental to enter the market. There are a group of speculators that are playing with the economy news. We cannot discount it. That's why I think, the best approach is to pay attention to other market participants, meaning that combining the technical or the wave count with, the fundamentals and economy news using what we call the trading triangle. So, all right. So the first tips is just to draw it like a chart. All right. And we know the guidelines, which you can go and learn about it on our website. The guideline: the first Elliott wave must always break a resistance level. It's the first signature of the bull. All right. Must. All right. So that's why I count my wave like this, following my own guidelines. My apology for traders for what's happening here. All right. There are some connection here. Okay. So apology to you. So here we are. So my first Elliott wave has ended here. Okay. All right. Very long. Extended. This is an extended first Elliott wave. When we have an extended first Elliott wave, there's a high chance that the third Elliott wave will not be very, very extended. All right. Because the first Elliott wave is already extended. All right. It's already extended. So we may see, a moderate third Elliott wave. All right. Now, what's happening now? Okay, so we're going to look at the internal wave. So when you count the wave, all right, you want to look at the internal wave. Now I'm on a weekly chart. I want to see the internal wave, of my drawing here. I cannot see them, on this chart. So the second tips, when you are counting Elliott wave, do not, stay on one single time frame. Change time frame, all right? Zoom into it, meaning that go to the lower time frame, zoom out of it, go into a higher time frame. If it's not clear on one time frame, you must change time frame, because we are looking at the same financial instrument, but we are looking at different picture on different time frames. All right? Okay? So now it's not very clear to me here. I can't say much what kind of wave I have here. So I'm going to go now, I don't want to go to the daily chart because if I go to the daily chart, I will find it a bit difficult to zoom into it and to show you everything clearly, you see, and I will show you all the data. So I've done my homework already. You see here, this is a daily chart. I will have a lot of problem to zoom into it and to explain everything to you clearly, but okay, all right, let's stop here for now, okay, and I'm going to look at the internal wave of this move here, all right. You can see that this is a corrective wave to the first wave, okay. So when it was coming down, the price went down. Now we can see now on the daily chart, it went down like this and then went up, okay, same thing like a chart, and then it went down all the way here, and then it went up all the way here, and then again it went down again. So it was a 5 move down. When we see a corrective wave, that's the third Elliott wave tips and trick about okay, how to count wave. All right, when we see a corrective wave formed of 5 waves, the first Elliott wave pattern, remember the second tips that you must learn the theory and know the 13 Elliott wave patterns. All right, when we see a corrective wave formed of 5 waves, the first thing that is coming to our mind, okay, the corrective wave should not cancel the impulsive wave. That's the rules of the wave principle, all right? So the second wave must not cancel the first wave, and the fourth wave must not cancel the third wave. A corrective wave must not cancel an impulsive wave. These are the rules that we follow. These are the rules established by Mr. Nelson Elliott, all right? Okay, all right? So I'm going to put a bit of color in my drawing so you can differentiate all the wave on my chart, okay? All right, so stay with me. I have enough time. Okay, it's a morning time in London, but sometimes, okay, I stay awake because for this kind of video, very important for traders. A lot of traders are following us. They want to know, George, what's happening. Okay, that's what we're doing here. Okay, so now, okay, move on. Color this one into orange. Okay, and I'll color this one into, okay, I'm running out of let's see, black will be clear. Okay, black, okay? So you see now, okay? So we have an impulsive move from here all the way here, which is the first wave. And then we see a correction that is taking place. This is the problem I'm talking about. Okay, how we zoom into it so we can see everything. All right? So there was a correction that has started, which did not cancel the first wave. So we see here, 1, 2, 3, 4, 5. It's a correction. Now this correction is formed of 5 waves. When we see that, the first thing that is coming to our mind is the zigzag pattern. The next thing, if you are using the Elliott wave theory, you must also learn about the Fibonacci, okay, extension and the Fibonacci retracement. Go to www.dayprotraders to know about Fibonacci. So now the next step, I will draw my Fibonacci tool. Okay, what I'm going to do so you can see everything clearly, I'm going to move this spot here a little bit up so you can see how I'm putting my my line on the chart. Okay, here, Fibonacci retracement, okay, down here. Okay, so the 5 moved, the 5 wave went down. This is a corrective wave formed of a 5 minor wave or 5 internal wave or 5 sub waves. All right, the first thing is coming to our mind is the zigzag pattern. We draw our Fibonacci tool, and then we will draw it from here to here. What we are looking for is the 50% Fibonacci retracement level. Very often, the B part of the zigzag pattern, that's why I'm referring you back to our YouTube channel, okay, so you may know about the zigzag pattern. The B part of the zigzag pattern, very often we find it very difficult to cross the 50% level. In this case, it went above the 50% level. Yes, it does happen, okay? So I'll color the 50% level into red. That's the red horizontal line in the chart. In fact, it went up to the zone of, okay, a 78% level. Okay, but if we zoom into that level also, are you with me? Okay, let's bring it to back, because I want you to see everything clearly so you don't miss it, okay? So we have count 5 waves down. Now we want to analyze the internal wave of this section from here to here. You see my line that I draw on the weekly chart. So I want to see the internal wave. Like a child again, I will say that the price went up to this level here. See, it went up like this. And then what it did, it came down a little bit. we know that the B part of the zigzag, okay, is normally 3 waves. All right, again, look, beautiful, isn't it? So I'm going to remove some lines so we don't have too much lines on our chart. The line that I've drawn on the weekly chart, I'll start removing them. So we have 1, 2, 3, 4, 5 waves. That is the A for alpha, A part of the zigzag pattern. Now we have the B part of the zigzag, which is 1, 2, 3. According to the zigzag pattern, the internal wave of the zigzag pattern is 5, 3, 5. 5, 3, 5. Okay? Alright? Alright. So we see 1, 2, 3, 4, 5. Alright? I'm going to remove now my Fibonacci tool because we highlight the 50% level, so we don't have too much drawing. So we see 1, 2, 3, 4, 5. Now we are expecting a B corrective wave should be also into, okay, 3 waves. We can see that once you see that the move that went all the way to the 50% was not divided into 5 waves. So we will expect the B correcting to go above the 50% level because, apology to traders, all right, so because the first part, okay, of the B part of the zigzag, okay, as you can see here, all right, it went straight to the 50% level, but we know that the B part of the zigzag pattern is formed of 3 waves. So we will expect the B part of the zigzag to go above the 50% level. As you can see, our B part of the zigzag pattern is formed of 3 waves. 1, 2, 3. Let's color them a little bit to put a little bit of color into them. I will use again turquoise, okay, and I will use in the middle here. 1 second please, red, okay, now I will use instead the green, all right, and I will use again turquoise here. So far at this stage, okay, you see now the tips and tips about how to count wave. I hope you are learning something from it, okay, and then we put it to use, okay. So here we are, okay, so we see 1, 2, 3, 4, 5, first part of the zigzag pattern, all right, 1, 2, 3. The second part of the zigzag pattern, this part we call it A for alpha, this part from here to here, that's what we call the B part. So for now we see 3 moves here, we will be saying to ourselves, we will expect the dollar yen to go down again into 5 waves. This is the line that I draw here. So I want to see the internal wave of this move down here. Again, like a little child, okay, all right, what the price has done, okay, it went down, okay. All right, you remember the first tips? Count it like a chart first. And then it went up like this. All right, okay, all right, you see now? And then it went down like this. Okay, my apologies to traders. There's a reason for this, okay, because I have some software confronting with each other. So apology for that. So here, and then it went up again a little bit like a child. All right, are you with me? And then it went down like this, okay? I'm going to remove the line that I've drawn on the weekly chart so we can see that, okay, we see 1, 2, 3, 4, 5, 1, 2, 3, and now we see again what? 1, 2, 3, 4, 5. So we will say to ourselves that our zigzag pattern is completed right here. All right, so now I will color this again a little bit, put a bit of color into it. All right, bring a bit of yellow. I hope you like yellow. All right. Okay, and then I'll bring a bit of orange here, all right, here, okay, a bit of pink, not to upset the ladies, all right, here, okay, all right, and then we put a bit of, I'll leave this one blue, and I'll color this one into red, all right, so we will say our zigzag pattern is completed here. You remember what I said to you, the second tips, to know all the 13 area wave pattern. We also know that sometimes we do not have a simple zigzag pattern. Sometimes we have what we call a double zigzag. I will come back to that in a minute, okay? So this is about tips and tips about how to come with. All right, so now we see a zigzag pattern completed here. What's this move here? This move from here to here, let me put the spot right there so you can see. This move from here to here, that's what we call X. X for X-ray, all right? When we are dealing with a double zigzag. The double zigzag formation is a zigzag, X, zigzag, all right? So we have a zigzag, which is this one. You see the shape? Went down, went up, went down. It's a zigzag. The middle part of a double zigzag, that's what we call X. All right? So you can learn about this. All right? Learn about this, all right? On the internet, okay? On YouTube, okay? This is the X. Now, let's see, because the X, after the X, all right? X for X-ray, we will expect another zigzag. So now I'm going to look at the internal wave of this move down to this level here. All right? Okay? All right? We want to see whether it's formed, okay, of a 5 wave down from here all the way here. So I'm going to remove the line that I've drawn on the weekly chart, and I will start looking again, zoom into it. If it's not clear for me on these charts, all right, I will go to another lower time frame to zoom into it. Remember the second tips, use different time frame, do not stay on one single time frame. So it went down like this, like a chart. You remember the first tips about how to count wave, all right? And then again, it went down, and then again, it went up a little bit like this, and then it went down again. How many waves are there? There are 5 again. 1, 2, 3, 4, 5. This is a 5 wave, is correcting this one. So we are again at the beginning. Count, we are dealing with another zigzag pattern, because this is a double zigzag forming here. So you see, we counted the first zigzag. Okay, the first zigzag has started from here and ended here. Now followed by what we call X. Now a new zigzag is underway. Yes or no? We have seen 1, 2, 3, 4, 5. What do we expect now? We'll expect 3, because the formation of the zigzag pattern is what? 5, 3, 5. Let me say this again to you. The formation of a zigzag is a 5, 3, 5. A double zigzag is a 5, 3, 5, X, 5, 3, 5. Let me say this again. The formation of a double zigzag is, okay, the internal waves. These are 5, 3, 5, X, this is the X, X, 5, 3, 5. So we have count now 1, 2, 3, 4, 5. What do we expect here? We will expect 3. So at this stage, we will say that, okay, this is the B part of the second zigzag. The B part of the second zigzag. For that reason, I will look for opportunity to sell the dollar yen right here. In fact, I've already sold the dollar yen because of my wave count. But it's not only because of that I'm selling the dollar yen. I will explain it to you also. Another reason why I decided to sell it straight away. I will tell you in this video. If I forget, put it in the comment so I may record another video, all right, to explain to you why I sold it straight away. It's not because I have count a double zigzag, so we see the first zigzag, so we can divide our wave count, put a vertical line. This is another tips to allow you to simplify your wave count. So we see that the first wave has started from here and ended here. Okay, let's put a vertical line. See, that's the first wave, and then we have a zigzag from here that has ended here. All right, 1, 2, 3, 4, 5. 1, 2, 3. 1, 2, 3, 4, 5. Are you with me? Then we have also the section that we call X, which is this section here. All right. Now we have again, let's zoom into it. All right, let's zoom into it. Now we have another zigzag that is being formed. It's not yet completed. So that zigzag, the first part of the zigzag is the A part of the zigzag, which is 1, 2, 3, 4, 5. So which has ended here. Now the second part, which is the B part of the second zigzag, is 1, 2, 3. Right here. We'll look for opportunity to sell right here. All right? Okay? So what we will expect now, we will expect another 5 move down for the dollar yen. Okay? 5 move down for the dollar yen. Okay? All right? We don't know how deep it will go, but we know that it will be formed for 5 waves. Sometimes the price will not go down in 5 waves. We can have a sharp correction, which means the price goes down very fast without, displaying, clearly the 5 internal wave. But we are expecting the dollar yen to go down here, all right? Then that will complete, the double zigzag. Now, sometimes we can end up there is also what we call a triple zigzag. So the formation of a triple zigzag is a 5, 3, 5, X, 5, 3, 5, X, 5, 3, 5. All right. If there's something you want to review, replay the video, pause the video. And you can do that with YouTube, move it. This is for educational purposes. You can do it, so you can understand, what I've already explained. It can be complex for some traders, but it's very simple, like a chart. I did it in front of you now, showing you a few tips and tricks about how to count wave. You can see that I did not stop on one time frame alone. I can zoom into it, even go to the 4-hour chart, to see clearly my internal wave. After I count my wave, I do not stop here. Why? Because of the trading drill. When we see a setup, this is a setup, we must validate the setup. And then we wait for the signal on another time frame, and then we go to select a low risk entry point. If the signal fails, we will not say that because we are the most intelligent Elliott wave traders, and we stay there. Maybe we are wrong. Do not force it. Just come out. Just come out. All right. Also, if the price goes above resistance level and find a support, don't force it. It is going to go up. If it displays high or low, buy it. All right? Don't use the Elliott wave like a size. Do not force the Elliott wave onto the market. All right? Do not fight the market. The wave principle allows traders to avoid fighting the price, to avoid trade indicator, to avoid fighting the market. Human beings have spent most of their life fighting themselves, fighting their wife, fighting their children, fighting their friend, fighting their cousin, fighting their parent. It's time to stop fighting the market, all right? No one can win, all right? So that's why, even though we are using this tool, these are guidelines, this is our trading plan, but we cannot force it onto traders. This is what I am trying to communicate to traders that are following me. You know Elliott wave, yes, you have an edge, but do not be arrogant and do not ignore the price, Do not force it onto the market, all right? Be careful, Very important. All right, so you see now, so this is how you can count Elliott wave. I promise that I will explain to you why, I will decided to sell the dollar yen straight away here. I'm going to go now to the 4-hour chart, all right, and I'll finish with my wave count now. I'm going to remove all my line now on this chart, and I'm going to go to the 4-hour chart. Now I'm going to talk about Fibonacci extensions and Fibonacci retracement. As I explained to you also, if you are learning to master the Elliott wave, at the same time, you must learn, the Fibonacci retracement and the Fibonacci extension. They work together because the market is fractal, So we see on this 4-hour chart, the price went up from here all the way here. And then it pulled back to the which one? This one, 80. No, call it because there's only a bit of it that went a bit, and then it pulled back into 3 waves. You can see here this was a correction because it has been divided into 3 waves. You can see here, all right, because correction is 3, impulsive is 5, all right. It pulled back into 3 waves. See, went down 1, 2, 3 to Fibonacci retracement, 78.6%. Now, very often, trader will say to you the price will go to 127% Fibonacci extension level, 138%, 161%. I say to traders, pay attention to all the Fibonacci extension level, all right? And do not ignore the price. The Fibonacci extension level are highlighting hidden support and resistance level, but one must align them together with the price shaft. All right. So when we see that, in fact, I show traders how to day trade using Fibonacci, and I demonstrate to traders, and I told traders that this currency pair has a high chance to go to the level of 9950. Check it at www.youtube.com day pro traders, how to day trade using Fibonacci like a pro. And the price was somewhere here. When I was telling trader that the price has a high chance to go up to the level of 9950. And in fact, last weekend, I told trader that the best scenario is to allow the price to go above the level of 100, okay? That would be gorgeous. And from there, we will look for opportunity to sell. Yes or no? I did on Facebook, and you can check the recording, okay? All right, it's not about saying, it's not because I said it that it happened, all right? It happened because, okay, the market allowed it, all right? It's not because I said it, then it's happening, but it happens, all right, because the market allowed it, okay? If the market did not allow it, okay, it won't happen. So the price pulled back, so we will use the Fibonacci extensions. So we want to know where are the extension level, so pay attention carefully. The first horizontal line here, okay, that's the 138% Fibonacci extension level, all right. The next level above it is 150%. Some traders never use 150. I recommend to traders to pay attention more to the 150 level. Why? Because it's between the 138 and the 161% level. Sometimes the price will stop on 150. All right? So be aware of the 150% level, okay? And the next level on top of the 150 is, okay, it's the 161% level. So if I'm selling now, I will make sure that my stop loss is above the 161% level, because in case the price decided to retest that level, I am not taken out straight away, all right? Okay? But looking at the price itself, what do we see now, okay? So the price now at a 150% Fibonacci extension level, all right? We can do the same exercise like this. We may say, all right, instead of draw somebody else may draw their line, the Fibonacci extension from here to here. And they may see, okay, we will say, okay, it stopped at 161% Fibonacci retracement level. And then they will use the Fibonacci. This exercise is to go into the mind of other traders. All right, very simple, okay? So they will have their one, this will be their 138%, and the second one will be 150, and this one will be 161% level. But I do not want to use it that way because of the wave here, 1, 2, 3. This is more about correction. 1, 2, 3. It went up, and then went down 1, 2, 3. I prefer that than this one, okay? Because this was a bit messy here. All right? So this is 150%. And also looking at the price itself, look at the price, look at the price, look at the price. Okay, on this 4-hour chart, see? The price found a resistance here. Okay, right here. And now, again, resistance here, all right? All right? You see here? I also posted a video on I will post. In fact, I haven't yet posted that video. I'm still recording it now. I mean, I'm still editing that video now, which is how to swing trade using the MACD indicator, the double top MACD cross. We will use a multiple time frame trading method. Okay, so you can check that video on George Trio channel. Okay, during this week, that video will be ready. How to swing trade using MACD. Now I'm using here the MACD 16, MACD 16 34. 9. Okay, I have slowed down my MACD a little bit. So now I have the price. Okay, there was a high here, the price pulled back, price returned back to the starting point. This is a cycle point. Now you see that we have counted our wave. Now we are using different trading strategy, okay, to validate our wave counts. All right, so now this is a setup. Okay, I see the first zigzag, I see the X. Now, a second zigzag is underway. I know that this is the end of the B part of the second zigzag. I'm expecting the C part of the second zigzag to be underway from here. But I will not force it onto the market if the price goes above this line here, okay, which I'm going to color now, okay, into green, all right, go above the green line in the zone of, okay, it goes above the level of 139, okay, 139, okay, and the final support, okay, I will stop selling it. If you return back below it, then game on. All right, it makes sense. All right, and it's also powerful. So this video is not about sell, sell, sell by all means, whether the price finds support or not. It means that sell if you receive a valid sell signal, okay, and if the signal fell, come out. All right. If the price goes above the level of 10039 and finds support, all right, we will look at it and reanalyze, okay, what is taking place. As I said to traders, the economy news and the fundamental can change the dynamics of the market instantly. You just need the Fed to say something else, and you see tomorrow, everybody start buying the dollar. And also, the economy, we are comparing the dollar to the yen. If, for instance, the Japanese economy came up with some bearish data, well, the dollar yen may go up. All right, so this is our warning line. We have come our way. We have done our homework. This is our trading plan. All right, but we will not force it onto the markets. Okay. I hope you have learned something from this video about the tips and tricks about how to count wave, and then we put it to use to make an excellent decision. Before I close this video, what we have discussed in this video, we have shown traders, okay, few tips. We start drawing, okay, line on our chart, counting wave like a chart. Price went up here, price went down here, price went up here, price went down like this, okay? The next thing, we want to learn also the theory and to know all the 13 Elliott wave patterns. Go to 24elliottwave.com, go to the internet, okay, check YouTube, all right, and learn more about the wave principle because it's the wave theory. Learn at least the theory and know the 13 Elliott wave pattern. The next tip that we discuss in this video about okay, how to count wave is that we do not want to stop on one time frame. If we cannot see the wave clearly on one time frame, we must, okay, change time frame. If we go into the lower time frame, we are zooming to the price. If you are going to the higher time frame, we are zooming out of the price. The market is fractal, okay, and we must combine the Elliott wave with a Fibonacci. All right, it makes sense, okay, it makes sense, and it's also powerful. Do not force Elliott wave onto the market. The wave count, it allows us to focus the market. The forecast is our trading plan, but if the music has changed, all right, the downs must change. All right, okay, it makes sense. It's also powerful. We have also discussed, okay, the zigzag pattern. The formation is 5, 3, 5. We also have a double zigzag, which is 5, 3, 5, X, okay, 5, 3, 5. Sometimes the market can go, the correction can go on for a long time. We can have a triple zigzag, okay, but in this video, we have seen so far a double zigzag. All right, are you getting the message? When you see a correction formed of a 5 wave, the first Elliott wave pattern that is coming to our mind, okay, is the zigzag pattern. Remember that the zigzag pattern is correcting a motive wave. So, as I show you on a weekly chart, let's go back again. All we have done so far, okay, let's go back again, is that this is my wave count, which is from here, the first wave, apart from everything else trader has come before. It's my first wave. And I told you, now we have seen a double zigzag in this session here. This is my second Elliott wave. This is my own wave count. This is my second wave. And we have seen a double zigzag in formation. It's not yet completed. All right? Do not use the wave principle like a science, okay? Use it, okay, like an intelligent trader, okay? Combine the technical and the fundamental. Check Google Finance, check Yahoo Finance. When you see a setup, validate the setup. When you count your wave, okay, use the multiple time frame trading method, okay, to participate in the market. It makes sense? It is also powerful. Until the next time, enjoy yourself and be very happy. We are the TSTW SYS 008 traders. Speak to you soon.